right, 10 seconds.
What's cooking, Gumbo Nation? You're listening to Mortgage Gumbo with Dwayne Stein right here on iHeartRadio, and I'm your host, Dwayne Stein, the Gulf South Mortgage Authority. And this is your home show where for 10 plus years we've been providing education and options on what is or will be your most valuable asset, your home. If you're new to the show, welcome to the Gumbo Nation. Glad to have you with us today. Think you'll enjoy the show. Hey, if you want to hang out and chat with us outside the show, 504, outside, shoot an email to info@mortgagegumbo.com, or the home away from the show is mortgagegumbo.com. If you want to join the show live today, 504-260-0995. Got a great show planned for you today. Hey, had a little disturbance. Luckily, didn't amount into anything, right? So we'll take that. That is for sure with the storms, but it definitely gets everything cranking up. It gets everything going. Shout out to the Queen last week. My gosh, the amount of calls we got for her sent over to her with all that flood news and everything we discussed. So, hey, if you want to go catch a show, go over to Spotify, iTunes, Producer Extraordinaire uploads that stuff after all the shows there over to their sites. You can go to YouTube. Just got an award from YouTube. Got a thing saying congrats. 750 plus videos that are uploaded, folks. And yeah, thank you, Dave. And we do that. That's for you, Gumbo Nation. That is for you. Look. And we're going to talk about reviews in a second here because y'all are amazing. But, you know, I do a poor job of I don't go out and beg and trying to go viral. I like to think of what we do here at Mortgage Gumbo is authentic or organic, right? Let's face it, you're going to see through the BS. So I don't go in there and go, hey, bunch of, subscribe. Would love for you to. Look, if you go in there and you're checking out the stuff, and we see how many people are visiting, so that's why I don't get caught up on the subscribers, because I can see how many people are visiting and educating, and that's why it's out there. It's not some kind of pay-to-view platform or anything like that, but I know some of y'all, obviously can't be tuning in during the times that the show's running, so there's places for you to watch that. You can also go to Mortgage Gumbo. Hey, if you just want the audio, it's uploaded on there, or the iHeartRadio app as well. So tons of places to find the information for sure. But look, I enjoy being your home wealth advisor, and I really appreciate you. And, on the show today, we're going to talk about...
Tell them what you are, though, Dwayne. Tell them what you are. A lender.
A good, without a doubt, brother. Yeah, Barrett. Thank you, there, dude. Look, and that is the biggest thing, and I could tell you, and I appreciate y'all. It's not, hey, just call and look at this. My job is, as a lender, is to make sure that I get you in the house of your dreams. I get you in the right loan, the right product. At what you are looking at is when it's the right time, and this week, and I don't talk about this enough either, Dave, is, we offer the free second look. And this week, closed a loan yesterday on a super nice lady, salt of the earth, just super authentic, and closed the loan, refinancing her house, free and clear, using it to get cash to buy another home that she wants to leave to the grandkids. Just super nice. And, she took advantage of the free second look and saved the lady. We're not going to get into all the financing and all that on how much the loan was and all that, but saved her over 0.25% in her interest rate and almost $2,000 in fees. So,
Ooh,
yeah. So,
that's a lot.
Yeah, she was pretty fired up. That's for sure. And heck, she's already had her grandkids give me a reach out yesterday afternoon. So that
So
is,
when somebody's
yeah,
brother, sister's cousin's roommate doesn't know what they're doing and maybe might have closed a loan last year, you step in and help them out?
exactly. Or better yet, before they close, reach out. Let me take a look. Let me see exactly what you're doing. And sometimes I go, hey, roll with it. Go do it. Looks good. But more times than not, we're able to show you maybe a different program where it puts more money in your pocket, and that's the point. And that's because of you, Gumbo Nation, and that's where the thankfulness goes in, and and that's why we do the show every single week is because of you, and that's why I just want to say thank you. And your trust, your confidence in me, and whether you're hanging out at the water cooler with the coworker referring them over. Look, everybody's like, hey, my coworker, my aunt, my workout partner told me I should reach out to you. That is what is my daily driver. That is what motivates me. That's why we do this show every week, is to make sure that we are getting this important information out to you. Like we say every week in the intro, there's a reason why buying a home is your largest investment and most valuable asset. So we want to show you how to take advantage of that. And, especially our first-time home buyers. Say it all the time. We cannot get that wrong. But, because of you, because of your trust, because of your confidence, look, July's hot. We're going to have a great July. We've been talking about purchase volume is up, especially here at Mortgage Gumbo. You'll see some headlines, hey, it's down. We talk about local, right? Real estate is local. We could care less of what's going on in Sioux Falls, South Dakota, right? We're worried about, hey, what is going on in the markets that we are in, right? And that's what we want to talk about for you, is helping you know when you look outside the window of your home, that's your market. And the reason I say that is where, your neighborhood can be totally different than another neighborhood that's down the street 1 mile, right? So that is your market. So that's why we want to make sure that we continue to just explain and break down and making sure that you understand that your needs are always going to be the priority, right? Always. Always. And it's funny this month, it's almost like a smorgasbord here. I mean, we're doing refinances, we're doing second mortgages, we're doing purchases, we've got construction loans going on, closing a couple reverse mortgages, right? So, renovation loans. So, and the reason we're able to do that, Gumbo Nation, and I'm able to help out when you refer people over, is we have the tools. Number one retail lender in the country. We have the tools to say yes. And in today's market, not only do you have to have the tools, but you got to have the options within those tools. That is what you're looking for. That is the key. And that is why, again, I'm so thankful to y'all, and appreciate. And that's why, look, I like it, and I ask you to continue. Send an email to info@mortgagegumbo.com. Or call me if there's a topic you want discussed. Maybe you're not sure about, right? And if it's a one-time thing or a one-off, hey, we'll discuss it and chat on it, right? But the deal is, hey, as a lender, what kind of programs are you out there? Let's talk about those things, because chances are, if you want to be educated on it, hey, I want to get out there and educate folks on that as well too. DSCR loans. My gosh, since I brought that up several months ago, on fire with that. Who thought you could buy in today's market, you could buy investment property with no proof of income? It's the craziest thing in the world. It's the craziest thing in the world. Don't want to see your taxes. Don't want to see pay stubs. Can care less. Can care less. As long as you've got 20%, we even have 15% down payment option. But if you've got 20% and that property that you're looking at buying to bring in new mailbox money is going to be at least 100% return, then you're good. So in other words, if your payment's $1,000 and your rent you're going to get is at least $1,000 and you're covering that, you're good. We even have if you're under 70, if you're under 100%, but not sure how many people are buying in, going, "Hey, I'm going to lose money on this." And it shows. Look, it shows in the reviews. Just received something from an outlet that we do that ranks the local loan officers, not just in our market, the state, and the country. Number one in our market and reviews. Number one in Louisiana, and top 250 in the entire country out of loan officers. So gives you an idea. That's what means a lot to me and it shows you, Gumbo Nation, for those maybe joining for the first time or those listening. I take pride in that because it just means I do exactly as I say I'm going to do. And those reviews are proof of that. And hey, feel free, if you like the show, go on to Google, go on to Mortgage Gumbo, and knock out a review. Would mean a ton. So, on the show today, we are going to get into FHA loans. Look, back in the day, I used to say on this show, if you go listen to some old shows, FHA loans, it's the loans of last resort. Today on the show, we're going to talk about why FHA loans are not a bad thing, and really how it can help you in today's market to win. We'll have the latest on the CPI, PPI. What does it mean? What's it going to mean for mortgage rates? What's up with Powell? What's going on with all that stuff? And then, of course, if you got questions, get them in the info@mortgagegumbo.com or call the show 504-260-0995. Don't go anywhere. We'll find you on the other side of the break. You're listening to Mortgage Gumbo with Dwayne Stein right here on iHeartRadio, 504-260-0995.
Give me a hoe if you got your funky bus fare.
What a great song. Yeah, you know how sometimes, Dave, songs just, the second I hear that, I think, just bring back memories. And I don't know, it was probably 7, 8 years old. I can remember this song. And, like, hearing it come out and me and my cousin and didn't even know there was a Dutch sort of a dance step, right?
Right.
But I mean, we were dancing to it, acting like we were kind of like kind of like a choo-choo train move, and but and if you remember, the songs would come on, and you're sitting there with your tape recorder right next to the
Oh
speaker.
yeah.
And
Oh,
trying
yeah.
to time it out, right? Oh yeah, record this one, and
Dude, when the DJs would talk over the opening of a song, it's like, shut up!
no,
I'm
don't
trying to
stop
record.
it. Yeah, no. Right, exactly. But man, Double Dutch Fat's good, man. Cousin Regina, awesome. Part of the Gumbo Nation, and works with Mortgage Gumbo as well. So good stuff there. All right, so this week, hey, big CPI. PPI news came out. I sort of put in my little article. Hey, did we thread the needle here? Look, it continues. It's a what do they call that? A catch bag or a mixed bag, I guess, so to speak, because there's so much headline drama on all this stuff that, and this is why we do the show. You don't know what to believe on this stuff. So you'll hear, hey, CPI. When you're looking at it, the inflation number did not go up. And y'all already know, and I think it's crazy because we've been on this for well over 2 years talking about Powell and how he's missing a boat and how much he's just hurting consumers. I mean, it's now an everyday thing. Do I think he should be fired? No. Do I think they should probably start the process of, getting somebody in and working towards getting who's going to be the heir apparent? Yeah, probably so. And the only reason being is just based on Trump. I mean, hey, tough guy, right? So we don't want to find ourselves, I'd rather there be a shadow person, so to speak, and behind the scenes we're finding out if, hey, if this guy is as good as advertised. Chances are who they're going to bring in is going to be. But what's funny is now, everybody, now you got the San Francisco Fed president saying, well, we think we should be maybe we should be cutting. And then you got another one. No, it's just, it's gotten out of hand politically. And at the end of the day, you've got 19 Fed members, 12 vote, right? And it's just gotten way, way too much from a standpoint. It's supposed to be independent. Right? That's all we want. I don't care what your political views are. What I do know is money is green for the time being. And I don't know anybody that wants to give more back or pay any more for it than they need to, right? And they want to make sure that their money is working for them. That's why we work very hard on what we do. So when the CPI came out this week, we had a little bit of, initially it was like, oh, okay, ho-hum. Then the reactions start coming up. We saw some rates. So we saw some rates peak up a little bit there because they're trying to really, they're trying to sell that in 5 months Trump's destroyed and done worse than the readings that they're reading when they're comparing it year over year, right? But and he wasn't in. I could see next year at this point because then you're going, all right, well, hey, now you've had a year. So these readings are all based. So you've got, when you're looking at things, they were so bad, well, it's going to go up, right? So, and then when you look at PPI, which is Producer Price Index, that's how much we're paying for things. Well, we saw that not as bad. So that's where you're sitting there trying to go, where are these tariff things going to come in? When is that going to hit? And what effect is that going to have, if any? Way above my pay grade, right? But so these are the things that, and while what the Fed does not have a direct effect, and we've talked about this for 10 years of me being on radio, and I've talked about this for 30 years of being in the industry. What the Fed does not have a direct effect on mortgage rates. However, they do sort of line up when you're looking at how the market is right now more than ever, right? Because people are, where are they going to invest, right? And we've spent so much money on other people's wars and all these other things that world strife used to be, like, hey, a war going on, hey, rates plummeted. People headed to treasuries. Well, now you've got, so many. I forget what the number is. I think it's $7 trillion are sitting right now in cash in banks where people aren't investing yet, right? So how do we get that money? How do we get folks using that money, right? Do they use that to buy a house? Well, a lot of people are like, well, I'm just not seeing the returns. Well, if you don't like 3-4% return on your house building equity, what are you comparing that to? Right? Over the next 5 years, they're expecting home accumulative appreciation to be over 19% through 2030. I'll take that on my house. I'll take that. I'll take gaining 20% over the next 5 years. The problem is it's too close to folks who bought in 20 and 21 who got 20%, 19%, 8%, 9%, right, over the last 4 years. That's what everybody wants to compare to, right? It's that golf analogy. Oh, I drive at 300 yards. Yeah, one time you did, and there was a 25-mile-an-hour wind behind you. So that's why when we're looking at this, there's so much. It's not that the data is mixed. It's just the headlines, the narrative. And there are certain people right now that if they walked on water, they'd say, I told you they can't swim. So that is sort of what we're doing with. So what is that doing? Is that having an effect on the mortgage rates? It's keeping them where they are. But look, I right now, where they're at right now, we could see, we've talked about it with application volume here at Mortgage Gumbo being up, right? And it's sitting in a decent spot now for a while. Of course you want lower. Who don't, right? But when you're looking at it, you know what? Hey, Dave, let's get into our weekly segment we like to call Rate Watch. So sort of threaded the needle this week, right? We get all this data comes out. The unemployment comes out. And again, one of the things I tell you, go read up on what are continuing claims on unemployment. Because from week to week, you could have a company dump a bunch of people, right? Or the federal government goes and gets rid of a whole department. What you got to look at, Gumbo Nation, is, and what I track is, what are continuing claims, right? How many people are having to stay on unemployment because they can't get a job? Now, some of you will go, well, people don't want to work. I agree. Some don't, right? Because I see a lot of hiring signs out there. But when you're looking at it, it's the continuous claims, right? These are people who 6+ weeks, going to 90 days, are still on unemployment. That's the big number. And that's up around 2 million. I don't like that. I don't like to see that. That's something that I want to start to see trending down. Okay, so when we hear from JP, the idiot, when we hear him talking and saying, oh, the labor force is in a good place, I don't know where that data. So that's why when we talk about, headline drama, it's what outlet, where are you getting your information? That's why we try here on Mortgage Gumbo to kind of keep you in the real, regardless of politics. I'll give you my feelings, but I'm also going to bring the receipts as well. So 30-year, last week was 6.82. This week, 6.81. So after everything going on, hey, stayed flat. So we'll take that, right? So again, is the market, are people starting to go, you know what, hey, we want these 10-year treasuries? You got to keep in mind that federal funds rate, the reason you hear Trump putting a lot of pressure on him too is, folks, that's our debt. That stuff that you see ticking every day, and they show it's up to $36 trillion. That stuff has to be renewed. And it's coming up. I think it's $7 trillion or $7 billion or whatever it is coming due. Well, because of what's happened with Janet Yellen not doing them on short-term versus long-term rates, well, now this stuff's coming due. And they knew. And now we're paying, it's absurd the amount of interest monthly. 100 billion, something crazy. So 30-year, 6.81, that was flat. 15-year, 6.04, flat as well. FHA, 6.39, flat. Jumbo, same thing, 692, flat. VA, 640, flat. But here's the thing. You just heard me say flat across the board, right? But yet the 10-year Treasury, and this is why I tell you, mortgage rates can move without the Fed. Last week, the 10-year Treasury was at 4.364. This week, it's at 4.420. Well, rates didn't go up. What is that? 4.34, 4.364 to 4. What is that? 60 basis points. I didn't come in here today and go all of a sudden, hey, look, here's where rates are at. Rates didn't go up to, another 6 basis points. Sorry. So rates didn't jump up to 6.90. So that gives you an idea. That's what I'm trying to help explain to you, Gumbo Nation, is we don't need that. We just need some certainty. We need this tariff chatter, all these things. And surveys, look, when I hear it, I turn it off. Like, I'm no longer, I listen to it because I want to make sure I'm delivering to you, but I think you, like most of me, are like, what's it going to cost me? Right? All this other stuff, what's it going to cost me? And I heard an analogy this week, and it made sense, and I think it will to you too, right? A lot of us like sausage, and they had an analyst on. And I thought of this. A lot of us like sausage. But I would venture to say if we watched how sausage was made and what goes into sausage, we probably wouldn't feel the same way. And with this president, with this administration, it's so transparent that the making of the sausage is being put right in front of our faces every single day. We're not used to that. So it has an effect. It's reactionary. And it's hard for folks when the last 2.5, 3 years you've been grinding, right? And all of a sudden, but you're told it's going to get better. Trust the process, right? Just trust the process. It's hard. They got people coming on now. Oh, marry the house, date the rate. That was the biggest scam. Really? People's home values are going up. Marry the house, date the rate. What? If you're looking at comparing payments to your rent? Okay, well, most people, when they go, hey, I'm renting for $1,000, I'm like, you're not gonna get that same payment at this amount. But you can afford it. It's just what you've been renting. So marry the house, date the rate. Oh, that was baloney. No, it's not. There's appreciation. Remember, home ownership is a wealth building tool. It is not a get-rich-quick scheme. So, again, that's when we say data versus headline drama. That's what we're talking about when I put out these articles and put these headlines out there for you. So, all right, Gumbo Nation, stick around on the other side of the break. We're going to get into a little bit of, again, I bring the receipts. We're going to talk a little bit about FHA loans and why, how you could be taking advantage of it, and how it went from being the loan of last resort to an opportunity. So we've got some good stuff for you. Don't go anywhere. You're listening to Mortgage Gumbo with Dwayne Stein right here on iHeartRadio, 504-260-0995. I mean, we raving today, Dave, huh? I like it.
This song is awesome. Here it goes. Oh, the hook didn't drop. Sorry. Oh well.
Boo.
It's this old song from the disco era. Rah rah Rasputin, lover of the Russian queen.
Yep, I know exactly. That's good. I like it. All right, folks, we're talking about, welcome back, Mortgage Gumbo with Dwayne Stein.
Yeah, sorry about that.
You're good, man. You're good. So, want to get into FHA loans a little bit and talk, not a little bit, we're going to deep dive into this because one of the big things I always hear about with the FHA loans is, well, you know, I don't want PMI or I don't want mortgage insurance. So, look, I like to operate in facts, right? And what I'd like to, my big thing is this: we need to stop thinking about PMI. And this isn't going to be a show about mortgage insurance. We could do that in the future. You could go to YouTube, type in Mortgage Gumbo, look for PMI show or mortgage insurance, all that stuff. But got to stop thinking of PMI and mortgage insurance as the devil, as a four-letter word. The bottom line is 60% of home buyers take advantage of home ownership by using the benefits of mortgage insurance. So stop thinking of it as, they're, I don't want PMI. Look, take advantage of it. Take advantage of what it can help you get. And I help my buyers all the time because we've got a cost of waiting tool that we use. Well, I need to save up more. Okay. Or, Gregory brought this up last week, the different folk trying to time you cannot time the market. It's impossible, especially today. So this is where, for me, why I want to talk about FHA and why now. And I'm going to talk about the pros and the cons and the advantages of FHA. But a lot of people think FHA, and look, back in the day, it was sort of the loan that, hey, if you couldn't get them approved conventional, you went with that. And maybe so. Not maybe so. That would be correct. If you go listen to past shows, you'll hear me when I'm breaking down the difference. But see, the difference was back then, and this is something I've always done for my buyers, but we're not doing it right now because it doesn't make sense. Well, we could do a conventional loan and buy out your mortgage insurance when you're doing that initial purchase. How many folks knew that? And we used to do that all the time. We were one of the only lenders out there doing it. Did so many radio shows discussing this. But the reason we don't do that right now on a conventional loan is, number one, conventional loans, the rates are higher. But two is, nobody right now is signing up for the rate that they know they're going to pay for the next 30 years. So why am I going to give you a higher rate mortgage, sell you on, let's put down 5% and buy out your PMI or your mortgage insurance, when you refinance, you have to do the same thing. I had to explain that to a client the other day that was getting wamboozled with that. So we've got to make sure when we're looking at this and discuss, let's stop that narrative of mortgage insurance is the devil. Let's start looking at it as, how about this? How about we start looking at it as a down payment assistance program almost? Like, because with it I can buy, without it I can't. And I think that's got to become the mindset. And that's why we've been using this product and showing people, how this works and how it breaks down. But I hear it all, 3 conversations, a day. This week, well, we want to put down 20% because we don't want PMI. And they have the 20%. But it's a young couple, so now we're going to clear out their entire savings so they could be house poor. You know how many people we're refinancing right now because they overbought and now debt has gotten to them and they're taking advantage of the equity in their home? And they got 3% and 4%. We don't want you house poor, and that is the key right now. The key right now is how do we achieve home ownership and beat the affordability myth where we're making you not have to eat beef or chicken ramen noodles. So here's some data to give you an idea. With median down payment, okay, median down payment, 18% for all home buyers, 18%. Now, repeat home buyers is 23%, and that makes sense, right? Doesn't that make sense? Because you're selling your house, it's done what you needed to do, it's worked hard for you, and now you're going to take those funds and you're going to put them into the next mortgage because chances are either you're upsizing or downsizing and you're going to minimize that payment. Okay? Nobody can ever argue that a payment on a $250,000 loan, if you put down 20%, that payment is always going to be lower than if you put down 3.5%. I'm not going to argue with you on that. But that house is going to appreciate in value at the same rate. And we all know life happens. And when you need that money back, I mean, do you want to feel good going, hey, I bought the house for $300, you put down 20%, you owe $240, and when you're, whipping up some ramen noodles, you're like, yeah, we got $60,000 in equity in our house. Well, that's your money. It's no different than, think about it this way, all that money you're putting down, and folks, I'm not about larger down payments. There's just a time and a place. That's exactly why when you speaking to your lender, are they having these conversations with you? Because that huge down payment, it's really a lot of times, you can kind of compare it to going buy a secured credit card. Hey, I want to put $300 so I could have a credit card with a $300 limit. Well, you put all that money into it. Now, first-time home buyers, and this, again, is why I want to say how real estate is local. First-time home buyers, the median down payment is 9%. So on the median average home price right now is $396,000 across the country. That's $35K and change. Wait, don't turn the show off, because some of you are listening going, hey, I kind of like this dude. And then you're like, he's nuts. I ain't got $35,000. I know. I get it. So let's break it down by state. Right? Let's break it down by state for you because, again, real estate is local. So listen to this. Got the numbers, folks. That's what we do here. Who needs a life? I got the Gumbo Nation I got to keep rocking and rolling. Louisiana and Mississippi. Let's call them first and second. Not 49th and 50th, Dave. Let's call them first and second. Louisiana and Mississippi are first and second in average and lowest average down payment at 9.3%. But you know what? You want to know what that is? You want to know what that, when you're looking at what that, when you're looking at what is that amount? Well, it ain't $35,000. It's $6,100 in Louisiana. Mississippi, it's $6,100. Alabama, $7,500. Florida, the average, Alabama's median down payment's 10.4%. Well, you know why? Alabama's got a lot of condos. They got a lot of beach property. Florida, same thing. Average down payment's 14.2%. Well, you know why? A lot of second homes. A lot of people, they're snowbirds. So it's a little bit higher at 27,000. Texas, 11.3, 14,000 in Texas. So when you're looking at this and you're out there and you're trying to get educated on this stuff, don't let down payment be something. That's the number one factor. I don't have enough money for down payment and I don't want to pay PMI. That's the number one factor, and that's what I'm wanting you to kind of understand, Gumbo Nation, as we talk about how to win in this market and why an FHA loan is not a bad alternative. So don't go anywhere. Stick around. We're going to break down pros and cons of an FHA loan and why you really might be ready to be a homeowner versus continuing to rent or live with mom, dad. They want you out of there. You want out of there. Let us talk about that and show you how. You're listening to Mortgage Gumbo. Shout out to Corley. Appreciate you hanging out with Gumbo Nation Extraordinaire. Superfan Mike Polite on the other side. Appreciate y'all checking out the show. Corley, learn young. He's teaching you at a good age. Don't go anywhere. You're listening to Mortgage Gumbo with Dwayne Stein right here on iHeartRadio 504-2600-995.
Walk up
If
music.
everybody walked in and they had their own walk-up music, that'd be amazing, right? That'd be amazing.
You got to have a backup band, like from that movie, I'm going to Get You Sucker.
Yeah.
Wherever, everywhere
Yeah.
you walk around, you got a little band behind you.
Yeah, yeah. Or something about Mary they got to do, you know what I'm saying?
Oh, yeah, right.
All right. Sorry, me and Dave having our personal conversations here. Sometimes we nerd out. That's why you got to check out the Week in Geek. Dave, tell them about the Week in Geek, man.
The Week in Geek on News Talk 99.5 WRNO. Sunday nights at 7 o'clock, where we're streaming live on the Facebook page, Twitch, the YouTube channel. You know, we got the whole restream like Mr. Dwayne Stein.
That's right, bro.
And, so 12 years, baby. And Monday, I'm going to be back on Fox 8 News talking about nerdy books and books that have been adapted into big movies. You know, you got like The Running Man's coming out again. And so, like, all kinds of stuff.
Oh,
So,
that's awesome.
yeah,
man.
and I had George Takei, you know, from from Mr. Sulu from Star Trek. Oh my! Yeah, I had him last week.
Nice.
And next week I got Lou Diamond Phillips, baby.
Dude,
Lou
Young
Diamond
Guns.
Phillips. Oh
Young
yeah,
Guns. Love that. That's awesome. Check it
Yes,
out
sir.
this week in Geek. All right, let's get into FHA loans and want to kind of just sort of discuss when we're looking at this sort of, hey, what are the pros and cons? And at the end of the day, why is this program and why are we using this now at Mortgage Gumbo more than ever? And number one, credit's been challenged, right? People's credit limits are, their utilization rates are higher. So you're looking at student loans now. So from a credit standpoint, FHA is a lot more lenient, okay? They're not as strict. You can't be, so when we're looking at it, FHA is a lot more, even when you start talking about if you've had foreclosures or bankruptcies, a lot more lenient. The other thing that we can do at Mortgage Gumbo, and I do several of these because, again, everybody, and this is what I want you to understand when you come here, it is a judgment-free zone. People are always like, oh, I'm embarrassed about this or that. I'm like, look, let's figure it out. Let's work through it. What we can do with an FHA loan is we have the ability to do manual underwrites. So, A, the investor don't like the way it looks, we can do a manual underwrite for you. And we've got certain guidelines you've got to fall into that we can make happen, right? Just closed one of 576, turned down by 5 other lenders. Finally got to me, and now they're homeowners. The other thing is, and a big thing we're talking about, lower down payment. Minimum amount's 3.5%. So huge benefits there when you're looking at a lower down payment. And not only lower down payment, lower the credit scores, leniency, but the debt-to-income ratios are very flexible. Not as strict as conventional lenders. So when you're looking at your DTI, right, you have a front end and a back end. You have your front end, which is just your mortgages, your housing ratio, it's also called. You have your back end, which includes all your debt. Well, we've got them where they close 55, 56%. And we're not slamming somebody in something they can't afford. Maybe we're using a husband and not a wife's income or something like that, right? So it's not an affordability thing, but it does give that flexibility. The other thing is rates. It doesn't take much to hear that, hey, if a conventional rate right now is 6.81 and FHA rate is 6.39, that's lower. Almost 0.5%. So what does that look like? And really for your home buyers, especially first-time home buyers, we're talking about having to come up with less. So many of the deals that I do FHA, working with the realtors, it's huge seller concessions. 3.5% down, you come up with, the seller can pay up to 6%. 90% of the time, that covers your closing costs. So you're coming in with what's required, a minimum by law. And that down payment can be a gift as well. But your seller can pay concessions on that. And here's something a lot of people don't know about FHA as well. You could buy a duplex. You could buy a triplex. Hey, I've done fourplexes with FHA. So between 1 and 4 units, FHA allows. So how awesome is that? So there's a lot of winning with this program. Lower down payments, don't have to walk on water with credit, and allows you to afford more home. Now you'll hear people go, oh, well, all right, so what are some of the cons? Well, they've got loan limits. Listen, folks, you know what the loan limit in Louisiana, Mississippi, Alabama, all of that is for FHA? 524,250, 225. So if we're running up against a loan amount, we're needing FHA for 225, we're going to work through it and try to figure some things out. The other downfall when you're looking at with FHA, unfortunately, is it's only primary residences.
1 minute.
So it's not an investment property. But that's why I want you to, is an FHA loan right for you? Let's have that conversation. Let's see if this is something that you qualify for. Let's make sure you're not sitting on a sideline right now thinking you need a bunch of down payment. We've got a program that can suit your needs and meet your needs. That's
30.
what we do here at Mortgage Gumbo. Dad Cam. Again, thank you, Gumbo Nation. We're going to have one of our best Julys in years, and it's all because of you. Continue to go out there, spread the word. Go to mortgagegumbo.com. Sign up for the Rue newsletter. Go subscribe over at YouTube. Hey, go leave us a Google review.
10.
Or send an email to info@mortgagegumbo.com. Till next week, Gumbo Nation, keep stirring the pot.